to customer list. Okay, now since it was through acquisition we identified this customer list, then yes, we recognize it. Do you understand? International Telecom Limited will recognize it as their own, but not we. Remember, we are the one discussing. It is our own CFO discussing on our own financial statements, not their own. Now, this made the CFO realize how valuable the customer details are and has engaged the professional valuer. This one has nothing to do with us. So this information does not concern us at all. Do you understand, please?
Yes.
This has nothing to do with us. It's for another company, and those are our direct competitors. Now, over the years, Ondo Telecoms Limited's main business has been provision of mobile and fixed landline services, as well as broadband services. In July 2013, Ondo Telecoms Limited bid for the award of a subscription television license from the government. What do we do to this? Yes. So, okay, now there is nothing here yet. We only bidded. There is no information here. Abi, we bidded for a contract. We've not gotten it. Ondo Telecoms won the bid and paid 560 million for a 5-year license beginning from October 2013. Yeah, this is where the information is. All right. So there is nothing in information F and G. All right. Now, Ondo Telecoms Limited won the bid, 560 million for a 5-year license. The license is transferred, and at the time of winning the bid, the fair value of the license was estimated at 580 million. Due to the slow uptake of the television business, the license was revalued at 420 million as at 30th September 2014 by a professional valuer. What do we do to this information, please? Yes, what do we do to the information?
This thing suffered impairment from what we can see.
Okay. So what's the impairment now? How do you know it has suffered impairment? Do we have the fair value? This is the fair value.
Fair value is
580. Then they bid it for 560. Then after revaluation, it's 420.
I think he's also talking about IS 38 intangible asset, which is talking the intangible asset internally generated because of that license something. I think is also part of
Internally generated revenue. Internally generated what?
asset. In that license use also part of IS 38.
So you are saying a license is an internally generated asset? Is it internally generated? Don't forget, we are paying for it. Oh. We paid 560.
No, we bought 560. No, we bought this one. It's not.
We paid 560. Now, the market value is 420 as at September, right? At the beginning of the year, the fair value was 580 million. Does that make a sense?
Yes, sir.
Now, the purchase price was 560 million. That's the cost, right? So
Yes.
if 560 million is the cost, this one also, it will not be depreciated. It is an intangible asset, right? It is an intangible asset, but not depreciate, not a tangible one. So it will not depreciate. Instead, there will be amortization, right? Now, 560 million was purchased, was the cost of purchase in October 2013, and we closed the account when September 2014. I mean, that's
Yes.
exactly one.
Yes.
Year. Am I right?
Yes, sir.
Yes.
560, what's the depreciation per year or amortization per year? What will be the amortization per year?
560 divided by 5.
560 divided by 5, that will give us what?
112.
112 million. So
112
112
million.
million is the
So what else
depreciation
we
per
have
year.
is depreciation per year.
Now, at the end of 30th September 2014, what should be the carrying amount?
560 minus 112.
So let me put
So let me
448.
put
448.
so cost is 560, right? 560 million. Uh-huh. Amortization
Is 112.
112. 112 million.
Yes, sir.
So what do we have as our carrying amount?
448.
448.
448 million.
Yes.
Okay. Now 448 million is the carrying amount. But what is the fair value?
Fair value is 420.
420. Do we understand that, please?
Stand that, please.
Yes, sir.
Yes.
Yes,
Okay.
sir.
So our fair value is 420 million. Yes. Is there any impairment here?
Yes, impairment of 28
Yes.
million.
So our fair value is less than the carrying amount, right?
Yes, sir. There is impairment.
Impairment of how much?
28 million.
28 million.
28 million. 28 million. Any question, please? So in our financial position, how do we recognize the asset? As at 2014, what will be the value that will be in the financial position?
420.
Okay.
Okay.
420, that's the fair value, right? The same way we'll be identifying 332 million for the earlier asset purchase, the non-current asset, which is the block of flats, Abi.
Yes, sir.
And the valuation amount will be there, and this one, the fair value amount, will also be there. Any question? Any question? Any question from anyone?
In a question like this, are we meant to pass the show the accounting entries, that is the form of journals?
No. Do you really need to show accounting entries? Write a note to them, you have to explain. Let me see, and then show calculations. These are the calculations that you need to show, right? So the question says advice with suitable computations how the above transactions should be accounted for. That is disclosure. Do you understand? You're not passing any journal. And even if you now decide that you want to do a journal, well, you can do that, but your calculation, this little calculation can speak for you. Why you just give us the note for others? Right? So in this is what is going to your financial position. This is also what is going to your financial position. Right? Statement of financial position. And it's also the same thing here. Right? So this is your impairment loss. This your impairment loss will be in what? Income statement. Abi? Income
Yes.
statement. Revaluation gain also, income statement. So that's it. Any question, please? Any question from anyone? Shall we go into another question? Let's go to November 2015. Let's check November 2015. Okay, let me check my own material here. Are we there, please? Has anyone
Question
seen
4.
question 4? Yeah, we have it in question 4, and I think question 3 as well. Question 3, question 4. Let's see what we have there. Do I need to share it to the group? No, question 3 is on loan. Let me see question 3B. IS 18 revenue. No. C is disclosure. C is lease. Question 4, what do we have on question 4? Yes, let's look at question 4.
Please share it on the group, star.
Okay, so I'll share the material now. Send it to you. I heard you guys have two, what's it called? You just added me to the second group now. So I can see SBR1. You guys should not confuse me. Okay, I've sent it to the group. Has anyone seen it? November 2015. I don't think this one is loading.
Yes, sir.
November 2015, right? Has anyone seen it?
Yes, sir.
Okay. Yes, someone should read for us.
Ọmọ Ọlọ́run tó ń parọ́ ta ló fi jọ.
I don't know that person realizes this.
Mr. Moses, please mute yourself.
Have we seen it, please?
Yes, I've seen mine.
Who is reading the material for us?
It's November 2015, question 4. Are you here?
Yes, please.
Yes, please.
Okay.
November 2015, right?
A.
November 2015, right?
Yes, question 4.
Okay.
Okay.
Let me hold on.
Okay.
Hold on.
This one I shared is not sharing. My system is hanging. I don't know why. Can you please go ahead with the question, please?
Okay. November 2015, question 4. A.
Not sharing.
The Abuja.
Hold on. Let me.
Okay.
Download another one so you can see it on the screen. November 2015, right? Yeah, question 4. Yeah, question 4, please go ahead, sir.
A. The Abuja Municipal Development Authority has mapped out a development strategy for the development of the municipal. A certain area was mapped Model Area A, which allows companies to use the area for 2 years and dismantle all construction made on the allocated space. Because of the strategic location of this model area, Mafowo Seri plc, a company operating in the office, furniture and interior decoration industry, feels that this can help to promote its merchandise. It therefore pays for all the cost of the model area, including someone's mic is on. Okay. The model area, including design, construction, cost. The company plans to use the area for the allowed period and dismantle all the constructions and installations thereafter. The cost of dismantling the model area are normally 15% of the original construction cost, and the elements of the area are worthless when dismantled. The current accounting practice adopted by MPLC is to charge the full cost of the model area against the statement of profit or loss and other comprehensive income in the year when the area is dismantled. The accumulated cost of the model area shown in the statement of financial position at December 31, 2014 is 38 million. The company has estimated that the average age of the model area is 10 months at December 31, 2014. Assume a discount rate of 12% if necessary. B. MPLC recently undertook a sale campaign whereby customers can obtain free 3 after-sale maintenance service by presenting a coupon, which has been included in an advertisement in a national newspaper on the purchase of the company's furniture. The offer is valid for a limited time period from September 1, 2014 to December 31, 2014. The management are unsure as to how to treat this offer in the financial statement for the year ended December 31, 2014. C. The Abuja Municipal Development Authority, in order to encourage the flow of direct foreign investment into the model area, decided to subsidize the cost of the production of any foreign company that invests in the model area. MPLC, through its foreign wholly owned subsidiary, claimed the sum of 100 million naira subsidy. During an audit exercise, this anomaly was discovered and a fine of 10 million naira was imposed on MPLC. The company is to repay the 100 million subsidy plus 12 million interest. The total repayment has been regarded as an intangible asset which has to be amortized. D. MPLC gives a standard 6 months warranty to all its customers. The company has extended the warranty to 1 year for certain major customers and has insured against the cost of the 6 months extended period of the warranty. The warranty has been extended at nil cost to the customer. The claims made under the extended warranty are made in the first instance against MPLC, and then MPLC in turn makes a counterclaim against the insurance company. Past experience has shown that 85% of their furniture will not be subject to warranty claims in the first 6 months. 10% will have minor defects and 5% will require major repair. M estimates that in second 6 months of the warranty, 15% of the furniture sold will have minor defects and 10% will require major repair. In the year to December 31, 2024, the following information is relevant. All figures assumed to be correct. Assume that sales of furniture are on December 31, 2014, and any warranty claims are made on December 31 in the year of the claim. Assume a risk-adjusted discount rate of 5% required. discuss how items A and D above should be dealt with in the financial statement of MPLC for the year ended 31st December 31, 2014 under International Financial Reporting Standard.
Yes, please. Okay, thank you very much for that. So where are we taking it from? So from information A to D. So we read the information. Let's take them one after the other again. The Abuja Municipal Development Authority has mapped out a development strategy for development of municipal, right? An area was marked Area A. Because of the strategic location, Mafo Shere PLC, a company operating in the office furniture and interior decorating industry, feels that this can help to promote its merchandise, right? Now, it therefore pays for all the costs of the model area, including the design and construction costs. That company paid for it. The company plans to use the area for the allowed period and dismantled all constructions and installations afterwards. Now, they've mapped it out, but the person quickly wants to use it, right? Then, when it is time for them to use it, to use the land, he can dismantle the building he has on it and then return it back to AMAC. Now, for those of you who are not in Abuja, we call them AMAC here. All right. Now, the cost of dismantling the model area are normally 15% of the original construction cost. Now, what's the original construction cost? We'll get there. And the elements of the area are worthless when dismantled, which means after you dismantle it, you cannot sell anything as scrap. Do you understand? Are we there?
Yes, sir, we are with you.
Yes, sir,
So
we are
you
with
can't
you.
sell anything as scrap. All right. Now, the accumulated cost of the model area shown in the statement of financial position was 38 million. The cost has estimated that the average age of the model area is 10 months at 31st December 2014. Assume a discount rate of 12% if necessary. So what do we do? What's the cost now? 38 million. Right? So what type
Yes,
Yes,
how do
sir.
you recognize this asset? Is it an asset? Is it PPE? Is it what? Is it what? Yes, how do you recognize it? How do you recognize it?
I think it should be recognized as property, plant, and equipment, PPIS 16.
Okay. So PPE IS 16, right?
Yes, sir.
Okay. Now, that is recognition. Now, the company has estimated that the average age of the model area is 10 months, right? Discount rate, 12%. Now, what's the cost of the land? The cost of the area, the cost of everything, as shown in the financial position, 38 million, right?
Yes, sir.
Okay. So, is that the full cost of the asset? Would that be the full cost of the asset?
no, sir.
No, we'll add
What are
them
the other
dismantling
costs?
What are the
costs.
other
Make up
costs?
the cost
That will
of
make
the
up the
asset in
cost
our
of the
financial
assets
position.
now financial position.
The dismantling costs at the end of the day.
Thank you very much. How much is the dismantling cost?
15% of the original cost.
So what's that? What's the 15% of 38 million?
That is 5.7 million.
5.7? Are you sure?
5.7.
That's
5.7
5.7.
million.
5.7 million.
Now, that
Right?
5.
Yes.
Now, that 5.
When are we paying that cost? When are we paying the 5.7 million? Are we paying the 5.7 million now?
No, at the end of the
At the end of the period,
Which is
when
when?
that is at the end of 31st December
How many months?
10
20
months.
At the end of 10 months. Now we have a
10 months.
discounting factor, which means if you are paying that money in 10 months' time, that means we need to discount it. Because the value of that 5 point, how much do you call it? 5.2, right? 5.7. How much did you call it?
5.7.
So 5.7 million in 12 months' time will not be 5.7 million again. I don't know if that makes any sense.
you said
Wait,
what?
when are we buying the land? When did we buy
Hello,
the
sir.
land? The value of the land in our financial position in December is 38 million, right? When are we dismantling the land? How many years are we holding the land for? Are you sure?
10
Someone said 8
months.
months, 10 months. Are you sure?
It's not up to a year.
So this is it.
So
Can
this
you see
is
my
it.
screen?
Can you see my
Can you see my screen? Can you see my cursor?
So where is your
Sir,
cursor?
where is your cursor?
You cannot see my
I'm
mouse.
You
seeing
cannot
two
see my
years
mouse.
here.
2 years.
2 years.
So this is my
So
cursor.
this is my
Can you
cursor.
see the highlighted
Can you see
area?
the highlighted area?
Yeah, 2 years.
Yes, it's 2 years, sir.
So what you are seeing as 10 months is the average age of the model area. Age of the model area. So if I'm saying age of the model area, it means 10 months ago to December. That means the land was purchased around March. Does that make a sense? The land was purchased in March. I don't know if you understand what I'm saying. So let me take it again. According to the question now, the model area, that area A, can be used for 2 years by any company. So which means if I buy the land now, I'll dismantle it in 2 years' time. Does that make a sense?
Yes, sir. Yes, sir. You're right,
This
sir.
highlighted area, does it make a sense? Do we understand it now?
Yes, sir.
Yes, sir.
Okay. Now, this particular one I have highlighted again is that the company has estimated that the average age of the model area is 10 months at December 31st. So the land itself has been in existence for like 10 months. But we paid for 2 years. We can use it for 2 years. Does it make a sense now? Which means we need to get the value of the assets first. What's the value of our assets in our financial position? 38 million plus 15 million, 15% of 38 million. That one give us how much?
5.2.
Now that 15%, 5.2 million will be discounted at 2 years. So who can discount it for us? Yes.
That is 4.8.
34.8.
8.
34.8. What is 34.8? What did you know? What is 34.8? What did you get to be 34.8? Is it the total value of the asset including the 38 million, or only the dismantling cost?
The total asset.
Total asset. No, that can be
Yes.
wrong now. The value of the land itself is 38 million. What you are subjecting to a discounting factor is the interest that you are paying in 2 years. I mean, it's the dismantling cost that you are paying in 2 years' time, not the
Okay.
whole 38 plus 15%. Do we understand,
That's
please?
4.5.
4.5.
Mm.
Yeah.
4.5 million. Can someone else confirm that? What's your discounting factor for 2 years? At 12%.
12%. 4.5 is correct.
4.5 is correct.
What's your discounting
What's your
factor?
discounting factor?
0.79.
0.797.
So what are we
So
summing
what are we
up?
summing up?
Please, others should mute. One person, only one person should unmute. So we are looking for the cost of dismantling the asset, which is 15% of 38 million to be paid in 2 years'
The
time.
screen is up. Oh. Is it?
Oh God, this thing has happened again. No, it's not happening again.
You're seeing, I can see your screen.
You can see my screen, ba?
Yes, we can see your screen.
So it's your phone. Oh.
Are you there, sir?
I'm asking. 15%, I'm waiting here. 15% of 38 million. Now, if you say your discounting factor, someone should confirm the discounting factor of 12%.
Discounting factor is 0.79.
Do we all agree 0.79?
That 4.5 is correct.
Sorry? I didn't get that, please.
The discounting factor is 0.97 and the interest is 5.7. So 5.7 multiplied by 0.797. That's 4.5
Okay.
as our present value.
Okay. Okay. 0.7972. That's the discounting factor. Right?
Yes, in 4 decimal points.
Multiply by what?
5.7
Multiply by
our interest.
5.7 million. Is it a round figure? Is it a round figure?
No, 50% of 38 million.
Sorry, I can't hear you.
50% of 38
So
million.
I have 4.544.
4.544. Thank you. Okay, I think so. This is it. Let me bring my calculator because I feel like I'm the only one doing it here. Now, I hope you can see my
It's
calculator on the
correct
screen,
now.
right? How do we get discounting factor? 1 divided by 1.12, that's for year 1, divided by 1.12. Now, this is your discounting factor, 0.7972. Abi? Am I right?
0.7,
Yes.
0.797.
Anyhow. I like using 4 decimal places. 0.797. Now, you said 15% of 38 million is 5.2 million, right?
5.7.
7.
Okay, multiply by 5.7. That gives me 4.54. Am I right?
Yes.
So instead of
Yes,
Yes.
sir.
so which means the 5.7 million dismantling cost I'll be paying in 2 years' time. The value as at that 2 years' time will be 4.54. That's the equivalent value. When we are bringing it back to our present value. Abi? Do you understand what I've done
Yes.
here? Let me open our Excel sheet. We are about to end this class.
So you said the 4.5 is what?
Don't worry, I'm coming. So we have, how do we do it? We have the year, Abi. We have the cash flow. We have the discounting factor at 12%, Abi. And we have the present value. Am I right? So what is the year? In year 2, my cash flow is how much? 5.7 million. Right? Is anyone there?
Yes, sir. We are
Yes,
with
sir. We
you.
are with
Okay.
But we can still use annuity factor.
The discounting factor is what? 0. What did we get
12%.
earlier?
12%.
0.7971.
Abi? 0.7972. So the discounting when we do the present value, we'll be arriving at what? Oh, okay. That's because this one has naira here and million. So what's the discounting factor now? The figure will now be 4.9 million, right? Please, am I right? 4.5 million.
Yes, sir.
Now, this is the cost of dismantling the asset, right? Now, if this is the cost of dismantling the asset, what is our total cost of the asset? Total cost of asset is what? 38 million plus what?
42.4.5
Plus 4.54 million. And that gives us what?
42.54 million.
42 million, 42.54 million. Do we understand this, please?
Yes, sir.
Do we understand, please?
Yes,
Yes,
sir.
Yes, sir.
This is what I was saying. So 42.54 million is the amount that will be recognized in our financial position. 42.54 million. Right? Now, this 42.54 million, wait, when did we buy the asset?
10 months ago.
And this interest
4.54. Hello? This interest of 4.54 is for 1 year. I mean, is for this current year. Am I right?
It's 2 years we used.
It's 2 years, sorry. This is the amount we are paying this year, right? That's what I'm saying. This 4.54 million is the dismantling cost if we discount it to the current year, present value, right?
Yes, sir.
So now we have 42.54 million as the cost that we recognized on the assets in the balance sheet, right? Now this is the cost of the asset in our balance sheet. And that as the cost of the asset, yes, what else do we need to know? This asset will depreciate. Am I right?
Yes, sir.
The asset will depreciate at the end of the year, right? Am I right?
Yes.
When did I say the asset was purchased?
10
When did I
months,
say the
that's in
asset was
When did I
March.
purchased?
say the asset was purchased?
March. March.
If it was purchased in
If
March,
it was purchased in March,
that person should close mute.
that person should.
Shall we? Yes. Now, if the asset was purchased in March, it means it will only depreciate for 10 months this year. Abi,
Yes.
do you even know how I got that 10 months? This is the information that the assets
You stated
area,
it.
that area has been with us for 10 months. The company has estimated it to be 10 months, which means we purchased it in March. March to December is 10 months. Now, it means that the asset will only depreciate by 10 months as of December 2014, right? Now,
Oh,
what's the depreciation for the asset? Ordinarily, the asset should depreciate for 24 months. The asset lifespan is 24 months, right? So which means this 42.54 million, we can claim it for 24 months. Am I right? Am I right, please? Hello? This 42.54 million has a lifespan of 2 years, 24 months. Am I right?
Yes.
yes, yes,
Okay,
sir.
none of you is is it because I mentioned 24 months that you don't get? You're looking for how I got the
Yes,
24 months, right?
yes, 2 years.
Okay, but 2 years is better now, right? So the asset's lifespan is for 2 years, right? Now, if it was for two
Yes.
years, if the asset is for 2 years, that's 24 months. Now, the asset will depreciate for only 10 months out of the 24 months. Am I right?
Yes.
So
Yes,
what will be our depreciation now?
17.7.
Depreciation will be 42 point what? 0.54 million times 10 months, right? 10 months divided by
17,
24 months.
17.725.
17 point
7.725.
17.725. 725 million is depreciation. Do we understand, please?
Yes.
Do we
Yes,
understand,
sir.
please?
Yes.
Okay. What will be the my carrying amount at the end of the year now? 42 minus 17, right? Am I right?
Yes.
Uh-huh.
24.81.
Which is what?
24.81.
24.885.
24.15.
15.
24.15 million.
No, 815.
24.815.
Now 24.815 million. That will be the carrying amount. Any question, please? Any question, please? Any question? Now, this our 4.5 million, which will be paid in 2 years' time. What do we do to it? How do we treat it in our financial position? How do we treat it in our financial position?
Think it will be
Provision.
recognized under liability, abi?
And what type of liability?
Should be non-current.
Provision.
Is it a liability? Is it a non-current liability? Is it a liability or a provision?
A provision. I qualify it.
Provision.
It's a provision, right? Eh?
Yes.
Yes.
Aha. Now, the provision will now be how much? Is it this 4.54 million or the 5.7 million? How much are we recording as provision?
4.5.
4.5.
You are sure it is the
4.54.
present value we are recognizing?
Yes,
Yes.
sir.
Okay, so that is that. All right? Please, do we have anyone who doesn't understand this? Anyone who doesn't understand this?
So I have a question.
Go ahead, please.
So please, if we recognize the 4.5 as a provision, what happens to the other balance that will make up that 5.7?
So how do we do it?
We have
Yes.
discounted it.
We have discounted it. What do we do to that one? What do we do to the 5.7? What's the difference between the 5.7 and the 4.5? Yes. And why did we discount it? Why are we using 4.5 and not 5.7?
Because we want to know the present value.
The present value.
Yes.
Of the future cash flow.
Okay. Are you sure? Are you sure?
Yes, sir.
Do we have anyone there?
So we are here.
Yes, we are with you.
So do you have anything else to say? Now, there is a discount. So this is it. What you are recognizing as the provision is not only this 4.5 million. Do you understand? It is not only this 4.5 million. Now, this 5.7 million, is it 5.7 or this 4.5 million? This 4.5 million, right? We have another figure there on to be discounted at 10 months. 4.45 million. I mean, is it 4.54? 4.54 million. 4.54 million, right? 4.54 million to be discounted at 12%. At 12%, right? At 10 over 24 months. What do we have? I don't know if anyone understands what I'm saying. Are we there?
Yes, sir. We don't understand the question. What question, sir?
Okay. So I said this 4.54 million that we have, right, is to be discounted at 12%. Am I right?
Yes, sir.
Yes.
Times 10 over 24 months. What do we have? What is that discount on it?
0.45.
Is 0. What?
45.
0.45.
0.45.
Please, how did you get that?
Please, how did you get that?
4.5 times 12% times the 10 over 24.
1.57. 1.51.
1.51.
Yes.
I don't understand, bro. Sir, the first question, what did you get, sir? 0.
What you want is 4.54 times 12% times 10 over 24, right?
I didn't get that, please.
I didn't get that, please.
The value you are looking for, is it the total, the workout of 4.54 times 12% times 10 over 24?
Yes, sir.
Yes, sir.
It will
0.227.
give you 0.45.
How did you get the 0.45?
How did you get the 0.45, sir?
4.5, okay. I left 4. 4.54 times 12%
12,000.
times 10 over. Yeah, it's 4.454.
And we are asking how you got it, sir. We are not disputing it. We're just asking how did you get that figure? Did you hear me, sir?
She got 0.54 5. She approximated it's supposed to be 0.5448. She did 4.54 times 12%. That's how she came about 0.5448. Then if you now multiply it by 10 over 24 months, you have 0.227.
So 0.227. That 0.227 is a discount, right?
Yes.
That discount
Yes.
is if you have done 10 over 24, that means you've done it for, what's it called? If you have done it for 10 over 24, that means you have done it for only this accounting period. Am I right?
Yes, only for the 10 months.
Only for these 10 months. Please, I don't know if there is anyone who understands me.
Yes, sir, we are following.
Okay, now, that 10 months is a finance cost in the income statement. Do you understand? Now, the difference between your 5.7 and 4.5, what is it, please? 5.7 and 4.5, what's the difference between them?
1.2.
1.2. That 1.2 million is for the whole 2 years, right? Since it is to be discounted to the next, to the 24 months. And whoa, please hold on, let me check. Can I check, please? I think this session is about to end also. Hold on. Did anyone raise up his hands or what happened? I got a sound earlier.
Yes, sir, it was a mistake. I brought it down.
Okay. So
Sir,
now,
this session is not about to end, sir.
the session is about to end.
No. It's unlimited, sir.
Okay.
Can go ahead. Thank you.
Okay. So now we are talking about the. So we've mentioned it that this figure, this is our carrying amount, right? We are looking at the provision now, right? And our provision, we will have this 4.54, right? But there is a discount on this 4.54 as well, which is this 12% discount on our 4.54. Now the 12% discount is for this first year. And again, are you using 0.12? Hello?
Yes,
Yes,
sir.
sir.
Yes.
Are you using 0.12?
Yes, sir.
Yes, we used it.
Okay.
Please, where are we getting
Now,
0.12, I beg?
Okay,
The
that's
12.
12%. Do you get us now,
Okay,
please?
do you get us now,
okay,
please?
yeah.
And that's the 12%. Are we there, please?
Yes, sir.
Yes, sir.
So, the 5.45, right? You said this, you are looking for the discount here. And what did you get as your discount, please? What did you get? What did you get? What did you get as your discount? This 4.54 times 12%, what do you call it? 0.22, right?
Yes.
0.22 million.
4.54 times 12%, you have 0.545. Then when you multiply by 10 over 12, you have 0.227.
Is it 10 over 12 or 10 over 24?
10 over 24, 0.227.
You have 0.227. So 0.227 is the discount. All right. So 0.227 is the discount, and then we have 4.54, right? Now, this 4.54 is the whole discount for the year. But this is the one that goes into this year's income statement. Does that make sense? Because you are not taking, remember we are taking a provision of 4.54. Am I right? So don't let me, okay,
Yes,
now
sir.
let me do it this way. Let me do it this way. Let's leave it at the provision. And our provision figure, let me leave this figure. Our provision figure is how much? 4 million, 4.54 million, right? So let's leave it at that so that I don't disturb you with every other information. I don't overflow you with the information. Now the next one we have on the information, this is 9:13. We really need to round off, and we are doing only the cost alone. So we are done with all this information A, right? We are done with information A. Now let's go to information B. Information B says that they took a campaign, right? A sales campaign whereby customers can obtain 3 after sales service maintenance service by presenting a coupon which has been included in an advert, right? The offer is valid for December 2014. Management are unsure of how to treat this offer. How do you treat an offer like that? How do you treat it? Is it a liability or a provision or what? Hello?
Sir, we are with you.
I'm asking, how do we treat this item? We have not done liability. Have we done provision in this class? Have we done provision
No,
in this
sir.
class?
No, sir. No, sir.
Okay, so this is what we'll do. Let's solve this question when we do provision. Okay, let's solve this question. I think question 3 also has a warranty, right? So let's go back to this question when we get to provision. All right, and I think we can end the class now. Do you have any question before we move on? Do we have any question? Do we have any question?
Yes, I do. Good evening.
Good evening, please.
Okay. I'm so sorry. I came in really late, so I practically didn't get the class at all. Is there like a link, recorded link that I
Yes,
can
there
make
is.
reference to?
There is a record.
So before then, we talked about the second one where we have a sales campaign, okay, and the campaign is selling furniture and giving a warranty. Is it a warranty? Is giving 3 after sales maintenance service. And we are saying that the maintenance service, we should make provision for the maintenance service on every sales so that we can use it to knock off our payment when we sell off an item. We record the sales, but also make provision for the maintenance service, expecting 3 different maintenance services from each sale. So that's what we said on that. Then also for the municipal, where we have a foreign company, and we took a foreign company that could claim a subsidy of about 100 million. All right, and we have a foreign company, a foreign owned subsidiary company. So we decided that that foreign owned subsidiary company should be the one to take up the land. And during audit, we were caught. So as the audit reveals the anomaly, we are asked to pay a fine of 10 million naira, an interest of 12 million naira, and a refund of that 100 million, which brings a total liability of 122 million naira. All right. Yes, the CFO or the accountant has recorded the whole 122 million naira as an asset, an intangible asset, which is wrong. It is not an intangible asset. All right. Instead, it is a fine. A fine will be refunded. The fine itself is 10 million that will be refunded. Fine interest will be refunded, right? Those ones will be in our income statement. But the principal payment of that 100 million, that subsidy, is not a fine. is not an expense. Do you understand? It was under other income before. Subsidy should be under other income. All right. And now that the other income has been reversed, then it means that the other income that has been reversed will also be reversed under the other income. All right. So if it was a grant, wherever you kept it before, subsidy grant, if it was under the income statement of other income, then immediately you are taking it backward, you're removing it from the income statement. Okay, so that is that. It is a one-off payment. It is not something you are paying in bits. It's not something you are paying in bits. So that's why you will not record it as payment in bits. All right. Now the next one we have is the
Sorry
standard.
to bring you back up.
Yes, sir.
Sorry to bring you back up. You said fine. We understood that the 10 million will be fine. Then the 100 million will be reversed back to where it's coming from. What about the 12 million interest?
It's an interest, it's an expense now. Where do you have
Yes,
interest before? Income
It's
statement.
carried as finance cost.
Yes.
Okay.
I know it's not a finance
Thank you.
cost though. Finance cost qua. It's a fine.
Okay. Just a fine. Okay.
It's under fine. Both the 100 million, I
Okay.
mean both the 10 million and the
And the
yes,
12 million.
12 million. They are fines.
Okay.
So it's not a
Okay.
finance cost. We are not financing any project. So
Okay.
that's what we have. Now, another thing we have is the warranty, whereby Mafo gives customers 6 months warranty. Right? Is it 6 months? Yes, 6 months warranty. And the company has extended the warranty to 1 year for certain major customers. Major customers. Okay. Now, and they have insured against the cost of that 6 months extended warranty. So the additional 6 months extended warranty now, they've taken insurance policy against it. So that if our customers come for warranty, please, insurance company should help us attend to them. Insurance company should indemnify us. All right. Now, if that is the case, the warranty has been extended at a no cost to the customers, which means the company is not bearing any cost of that warranty since the liability, since the burden has been transferred to an insurance company, right? That's how to transfer the risk. The risk has been transferred to an insurance company. Am I right?
yes.
Okay. Now, so how do we treat that particular transaction too? Well, we have additional information there. Now, the claims made under the extended warranty are made in the first instance against Mafoshere PLC, and the Mafoshere PLC in turn makes a counter claim against the insurance company. Of course, that's how it is to be done. When the customers come for their claim, we look at insurance company, please, oh, they are here, right? Now, past experience has shown that 85% of their furniture will not be subject to warranty claims in the first 6 months. Which means in the first 6 months, we are only expecting how many percent? 15% of warranty claims. Am I right? Am I right, please?
Yes, sir.
15% of
Yes,
warranty.
sir, yes.
Now, 10% we have minor defects and 5% will require major repair. That is for those 6 months. That's the 15% warranty claim. Now, Mafo estimates that in the second 6 months of the warranty, 15% of the furniture sold will have minor defects and 10 will have major defects. Do you understand? That is the second 6 months now, which means in total, we are expecting 10% plus 15%, 25% minor defects for a whole year, and 15% major defects for the whole year. Is that it? Am I right? Those of you there, is that what we have?
Yes, sir.
Okay. Now, yes, please go ahead. Yes, who is that person? Write on, please. I thought someone was raising up his or her hand. Okay, that person just successfully distracted us. Thank you. Okay, now in the year 2014, the following information is relevant. Our sales is 3,000. I mean, standard warranty units, 3,000. Extended warranty units, 7,000. Selling price, 2,000. Major repair for this extended warranty, major repair is 600. Minor repair is 150. Are we following? Hmm? Hello?
Yes, we are.
Okay. Now, how do we calculate this warranty? This is the last question, Seth. Okay. Assume, oh, they have additional information. Assume that sales of furniture are on 31st December and any warranty claims are made on 31st December in the year of the claim. And assume an adjusted discount rate of 5%. Adjusted discount rate. Okay. So that's our discounting factor, Abby. Or discounting expected value. How do we call it? Yes. An adjusted discount rate. Yes, that's it. Now, looking at this question, what do you think? In the first 6 months, we have 15% repair. 10% will be 10% will be minor, 5% will be major. Am I right? Hello.
Yes.
How
Yes,
much did we
Baba.
sell? How much did we sell? Now, if we are spending on minor, how much is the cost? If you are spending on major, how much? So for minor repair, we have 150. For major repair, we have 600. Abi, am I right?
Yes, sir.
Now, what is the
Yes,
quantity of the
we are.
goods we are selling? By standard, this is what we're selling, 3,000 by standard. But now that we are extending it, our sales has increased to 10 by 7,000. This is the extended units. Now, which means both the 3,000, the standard unit, and the 7,000 is our total quantity sold. Do you understand that?
No.
Okay. So the standard we are selling for warranty for 6 months is this 3,000. And then we extended. Where is the information? Hold on, let me look for the information. The company extended its warranty to 1 year and has insured against the 6 months extended period. Okay, now the warranty has been extended at no cost. So, which means before now, we give a standard 6 month warranty. This is the quantity we're selling, that's the standard, and this is the extended one. This is the extended warranty we have given. Now, both this quantity and this quantity will give us how much? 10,000 units. Don't forget, we did not increase our sales. We only increased warranty. Am I right? Did we increase warranty or sales? We increased only our warranty, not sales, right? Are we there?
Yes, sir.
Yes,
Yes.
sir.
Yes.
We increased warranty, not the sales. So now, if our sales has been standard of 7,000, the warranty is extended warranty unit is 7,000, standard is 3,000, which means our total quantity sold in the first 6 months is 10,000. So the
Yeah.
85% given to us here, the 85% given to us here, that past experience shows that 85% of whatever we sell will not be subject to warranty claims in the first 6 months, which means it is only the remaining 15% that will be subject to warranty claim. Abby, am I right?
Yes.
Uh-huh. So Now let's. Do I have the Excel sheet? I've not created the Excel sheet. Let me see. Hold on, let me do the Excel sheet. So I'm trying to bring an Excel sheet to this. The Excel does not want to Excel. It's not opening. Okay. Now, for the 6 month warranty, let me put that here. We want to talk about the warranty, right? Now, in our warranty, we have two different warranties now. Don't forget, our warranty is at the end of is not coming in now. When is it coming in? When is our warranty coming in? This is it.
At the end of the year.
At the end of the year. On the 31st of the year. Now, what will be our warranty? Let's look at it. The expected value of our warranty will be what now? We have an expected value in this question. What will be the expected value? Our warranty will now be, the first one is for 85%, there is nothing, right? But for major repair, we have minor and major repair, right? Am I right? Please don't make a mistake. 10% is minor. 5% is major. Abi? So which means I have 10% minor warranty to be done on 10,000 units. Am I right? And on minor repair, how much is my minor repair? My minor defect will cost me 150 naira. Right? At 150 naira. Now, this minor repair is for 6 months, not for the whole year. Right?
Excuse me, sir.
Yes, ma'am.
Okay. I thought when we're analyzing the question, we mentioned that 85% of the total sales is not subject to warranty.
Yes.
Why are you then using 10,000 for the calculation? Why not the remaining 50%, 15% of the 10,000 units sold?
So the 15% is not done together. 10% is minor defect. The remaining 5% is the major defect. That will give us the total of 15%.
Okay.
Do you understand that now?
I think so.
Okay. So the 10%, the 15, the 85%, we have nothing to lose on it. There is no warranty on it. Past report shows that only 15% will come back. Only 15% will have a defect. Now, if it is 15%, what is that 15%? That's what we are trying to do. What will be the cost of the 15%? Now, the 15% is just for 6 months, which is 6 over 12. Am I right? This 10%, 10% is the minor defect. 10% of 10,000 is the minor defect. Now, that 10% will cost us 150 naira. Abi? Hello?
Yes, sir, yes, sir.
It will cost us 150 naira. And that 10% is for 6 months. Now that is that. We have another one. Let me just take this down here. Now we have the 5% as well. The 5% of major repair, 5% of 10,000, right? How much will that one cost me?
600 naira.
600 naira times how many? 6 over 12. Do you understand? So what is the expected level from this? So in this now, I'm trying to check what my first 6 months warranty will be. All right. Now my EV, which is the expected value, my discounting factor at how many percent? What's my discounting factor?
12%.
Are you sure it's 12%?
5%. Yes, I think 12% discount rate.
Someone should confirm. Is it 12% or 5%?
It's 5%.
5%. Adjusted discounted of 5%.
Uh,
Yes, 5%.
I, I don't know how you got your 12%. Oh. Me, I have 5% here. Okay, so we have 5%, discounting factor at 5%, and then we have the PV, present value, right? Now, what do we have? What is my expected value here? And what will be the discounting factor here?
Expected value is 75,000.
Expected value is 75,000 for the first one. Okay. It is whatever you give me, I will
While
record.
second one is 150,000.
150,000.
Yes, sir.
Okay. So what will be the discounting factor?
2.5.
2.5. How did you get 2.5?
Sorry, I made a mistake. Let me calculate it again.
Okay.
Zero 0.95.
0.95. How did you get 0.95?
Is it for 1 year? A year?
Is it up to a year?
Before 6 months.
0.975 or 976.
How did you get that?
So that discount, we are not going to use 1 year. We are going to use 0.5%. That's half of the year.
0.5%.
It's 0.5. That is 1 plus 1
0.476.
plus 1 plus r raised to power 6/12.
1 plus r raised to power 6/12. Thank you. Raised to power half.
0.4.
And what do you have there?
0.476.
0.97976.
Okay, now let's look at it. This thing is not up to a year, right? If it is up to a year, that's when you do raised to power of 1 in the next year, Abby. But this time around, it is raised to power of what? If you use 6/12, that will be raised to power of 0.5. Am I right?
Yes, sir.
So
Yes,
what
sir.
do we have?
0.976.
0.975.
0.975.
59.
6 approximately.
I don't understand what you are saying.
0.9759 in 4 decimal places. 0.976 in 3 decimal places.
Okay. Now, I think the issue we are having here is how to get that discounting factor. Now, in your own this thing, if you are using year 0, you'll be using 1 divided by 1.05 raised to power 0, which is 1. Am I right?
Yes,
But
sir. Yes,
this
sir.
time around, this is not up to 1. Because if you are using 1 divided by 1.05 raised to power 1, but you said you use 1.05 raised to power what? Half.
Half.
If you're using 1.05 raised to power half, are you sure you will get? What did you say you got?
Is I got 1.025.
1.025. How did you get it, Jerry?
So she used what she used was like in 1.05 raised to power 0.5.
If you are using raised to power 0.5, how about you use it as square root? Is square root not 0.5? If you say raised to power 0.5, 0.5 or 6 over 12? Is it not the same thing as square root of that answer? I don't know if you understand what I'm saying. So normally, yeah, good night. Sir. So normally, we are saying that your discounting factor is 1 divided by 1.05, Abby, and all of this raised to power 1. That is for year 1, Abby. Am I right, please? If I say
Yes.
all of this raised to power 1, that is for year 1. But this time around, it is not raised to power 1, it is raised to power 0.5. So instead of raised to power 0.5, how about you put it in a how about you put it as square root, because a square root is also half. I don't know if you understand what I'm saying.
Yes, sir. Yes, sir. I get you.
So how about you say that 1.1 divided by 1.05, whatever you get, you find the square root of it. I don't know. I don't know how. I don't know if I'm making any sense here.
So it should be 0.976.
No, it will not be 0.976. Someone mentioned it earlier. 1 point
It's
something. It has to be
1.024.
more. See, don't forget your discounting factor. The higher your discounting factor or the longer the years, the lower the factor. Is that not so?
I'm sorry, please. I have
Yes.
something to say.
Yes, go ahead, sir.
So, okay, so what I'm saying is when you are doing discounting factor,
Eh?
we are doing it in tabular form like this, it will have been you are raised to power minus 1. That's how you get your discount factor. Raised to
Mm-hmm.
power minus 2. Then multiply by the EV to get the PV.
I didn't get that.
So if you say, okay, normally discounting factor in a tabular form will have been 1 plus R raised to power number of years minus number of years. That
1
is
plus R raised
1
by
plus
number of years minus number. No, are you sure you're not using cumulative discounting factor?
no. 1 plus R raised to power minus number of years. If you say it, you should use 1 over 1 over R. You see the same thing as what I'm saying.
Yes.
So if you are now saying we should use 1 plus 0.5 raised to power minus 0.5, we still arrive at 0.76.
Okay, this is
Raised to power.
0.476.
Okay, so this is it. No. I think raised to power 0.5, not minus 0.5. If you are using minus 0.5, that is wrong. If you
Okay,
are
we should
using
use
minus 0.5, it
0.5.
means there will be no 1 over. That is 1 plus R raised to power minus R. I mean minus 1. But if you want to use 1 over, that means there will be no minus again in the raised to power.
Yes. Yeah, that's what I'm
Yes.
saying.
Abi?
It's still going to arrive, we are still going to arrive at the same answer.
So now this is it. Let's calm down. 1 divided by 1.05 raised to power half. Do you understand? 1 divided by 1.05 raised to power half. Now, it is good as saying that 1 divided by square root of 1.05. Does that make a sense? Does that make a
Okay,
sense?
okay, yes, yes.
Does it make a sense now? One divided by is either you say that 1 divided by square root. I don't know how to write square roots uh on this, but square root of 1.05. This one will now be a square root. Do you understand? Instead of saying that raised to power 0.5, you can just make it square root of 1.05, and that will give you, what do you have, sister? This is what I got. So this is it. This is what I'm saying. 1 divided
Yes.
by 1.05 at its square root. Where is square root? Is this one the square root or this one? No, I'm coming. I want to check something. Okay, I think I've seen it now. 1 divided by 1.05 square root. Is this square root? No. No, this is not square root. This is 1 over half. But this is the square root. Hello, are we together?
Yes.
We're
Please,
together.
I don't have my own calculator. That's why it's giving me this. Now, this
Hello,
is the
sir.
square root.
Can you do me like this?
So this is
Hello,
the
can
square
you
root
do like
sign.
this?
This is the
Let's
square root sign. This is the square root sign. 1 divided by square root of 1.05. Since I cannot do raised to power half here on my calculator, you can see my calculator now.
Yes.
Since I can't do raised to power half here, I can use square root. So this is square root. So 1 divided by 1.05, square root of 1.05 will give me this. Now, if you want to be sure, like I said earlier, the higher your discounting factor or the
hello,
longer
sir.
your years, the lower your figure. Yes, go ahead, sir.
Please, the calculator you are using does not follow the rule of Bodman, sir. That's why you are getting the answer wrong.
Tell me how it is to be, please.
I don't
If you
think that's
use
square
if you
root.
use scientific calculator, you get 0.9759. If you
Okay.
break it down, let's first square root of 0.15. Square root of 1.05. Whatever answer you get, then you do 1 divided by that answer. You still
Okay.
get 0.97.
Yes.
Okay. Now, if 0.975, right?
Yes.
Is that what you said? That's what you said,
Yes.
right?
Yes.
Yes. Yes.
Yes.
Okay. Now, let's do for year one. What do we have? 1 divided by 1.05 for year one. What do you have?
0.9523. 24.
0.9524.
Yes.
Now, the one you are talking about, what do you get?
0.9759.
9759.
Yes.
So which one is meant to be higher? So 9759 for half and 9524. Look at the difference. You know, discounting factor can actually be determined. You can know if you are wrong in your discounting factor. So 9759 and 9524. I think, let me understand what you are saying. This is what you are saying. 1 divided by 1.05, 0.9523, 9524. And 1 divided by, what did you do? 1 divided by, what did you do, please? Raised power of this,
So
or
what I'm saying is not this.
hmm,
Let's do 1.05 raised to power is
uh-huh,
0.5.
uh-huh,
Raised to power 0.5.
yeah. So what do you have
Now do
over
it
there?
1 divided by this answer.
Divided by what?
1 divided by 1 divided by this answer.
Okay, 1 divided by the answer. Please, you have a scientific calculator there. Check it. I don't have a scientific calculator with me. What do you have over there?
So again, 0.9756.
Is
59 rather.
0.9759. Is that what you got?
Yes.
Okay. So I believe
Yes.
what you have said. Now, what you said was,
0.975.
now let's look at it this way. Let's look at it this way. 1 point, you said what we should do is 1.05, sorry, square root of 1.05, right? Which is
Yes, sir.
1.025. Then 1 divided
Yes.
by the answer,
Yes.
right? 1
Yes,
divided
sir.
by 1.025, which gives us 0.9756. Is that what you got? Now,
Yes,
this
sir.
thing you have done, look at it in my own way. Yes, I'll pick these figures as you have used it, all right? I don't have a scientific calculator here to to argue this.
You can change your calculator to scientific.
In all of these, let me
No,
see.
no,
Let
no.
me
The
go
three
to.
hyphen.
I know.
Three
Yeah,
hyphen.
I know. Let me go there. Let me see if I can have that. Okay. Okay. Now, even with this, I'll still not be able to do. This is still the same half. Raised to power half is also this. It's still the same thing as what I did earlier. Now look at this thing I have said. I said 1 divided by 1.05 square root. Now this one is, can you see what is written here? 1 divided by square root
Yes.
of 1.05. Can you see what I have here?
Yes.
So which means calculator can actually be very crazy. Now square root of 1.05 divided by 1 divided by the answer is giving me 1.025 257. But if you say 1.025, I mean 1.05 square root, then 1 divided by 1.0247 will give us 0.9759. Now this one is different from that one. Oh. Do you know the difference? The major difference you can see from this thing. Do you know the major difference I see here? Me, I can say that calculation error, I mean, approximation can be part of that difference between this one and that one we got earlier, and that 1.025. But okay, in order to make things simplified, right? We are not here to argue. Now let's take this our 0.9759 as our discounting factor. All right? Can we just move on?
Yes.
This is already 722. 0.9759, right?
Yes.
So two of them are to take 0.9759. So 0.9759, 0.9759. And what do we have as our PV? So my present value will be this 73,000, and this one is 146,000, right? Am I right?
Yes.
So in total, what do I have? I have 219,577.5,
Yes.
right? So
Yes.
now let's move. Now, please, I need to put, don't forget your Naira where it is required though. All right, please don't forget. Now, this is the first 6 months warranty. Now, for the second 6 months warranty, what do we have? What's the defect? And how many quantity we enter the second 6 months warranty? The second 6 months warranty, we have only 7,000 that is extended to that point, not 10,000, right? 7,000 we enter that 6 months warranty, the extended warranty, 7,000. Now, second extended warranty. Are we there?
Yes, sir.
Uh-huh. So for the second extended warranty, what do we have? We have 7,000. And what is the percentage of defect? Percentage of defect is, yes, who is giving me the percentage? 15% for minor and 10% for major, right? Am I
Yes,
right?
sir.
Okay, so which means we have 15%, 15% times, this time around we have 7,000, right? Because only 7,000 we extend to that point, times how much is our repair? Minor repair is still 150. Abi? Now this other one, will it be for 6 months or 1 year? Is it also for 6 months or 1 year? 6 months, Abi?
6 months.
Times 6/12. Why the second one is also the same thing, but the fact that this one is 10% and this is 600. And what will that give us? Who is
Sir,
giving us? Yes, sir.
why are we using 6/12? Why not 1 year for this one?
Why is it 1 year? Why
Because
do we
I'm
use
looking
1 year?
at it in such a way that the second extended warranty is to be recouped at the end of the year.
Okay.
So it's going to take cognizance of everything that starts from the beginning of the year
So,
till the end of the year.
yes, I understand now. I understand your point. Now, whether we like it or not, this extended warranty also forms part of this initial 6 month warranty because it is an extension, not a different warranty. And you're right. I don't know if anyone understands that.
Yes, sir.
This extended warranty is extended from the initial 6 months, not a new warranty. All right? Yes, you're right. So, since it is an extended warranty, then we can place it out. So, what do we have here? 15% of 7,000 times 150 will give us what? Yes, use calculator
157
for us.
500.
Sorry?
157 500.
157,500. Okay. And then the second one will give us what? 700 times 600. That will give us 420,000.
420,000.
All right. And then our discounting factor is also at 6 months, which means we are still repeating this discounting factor. And what will that give us? Sorry, I'm using Excel sheet so I can perform magic. And what do I have here, please? I have 563,000 for 582.25. Any question? Any question? Yes, go ahead, please.
Sir, my question is that these first 6 months,
Mm-hmm.
why do we use 10,000 and second 6 months by using 7,000?
So in the question, we have 10,000 for the whole year in the question. But in the first year, in the first 6 months, these 10,000, all of them are the ones going into warranty. All of them. But the warranty is only extended to 7,000 units in the second half. I don't know if you understand that. Now, the question says
Okay.
that the company has extended the warranty to 1 year for certain major customers, not all the sales. So only 7,000 is extended for that warranty to last for up to a year.
Okay.
Yeah, that's why we are using 10,000 and 7,000. Yes, any other question? Any other question? Any other question, please? Now, what's the total of our liabilities here? What's the total of our liability here? Let me do this and this. So here we have 225,000 and here we have 577,500. Right? How do we treat this? Now we are making a provision for the first 6 months to be 225,000. This is our provision. The expected value, Abi, 225,000. And for the second year, we are making a provision of 577,500. Am I right? So now
Yes,
we
sir.
are making a provision even though the payment, this 577 is reimbursable. And it can only be reimbursable after the insurance company has done their own investigation and they have confirmed that yes, the warranty is worth indemnity. If the warranty qualifies for indemnity, that is the only time we can get back this 577,500 from insurance company. I hope you know that. I hope you know that.
Yes, sir.
Because that's one thing about insurance company is that you cannot win them. You can't win an insurance company. Do you understand? You cannot win an insurance company. So unless they validate it and they confirm that yes, this thing is correct, that is when you will get back this 577,500. Then by then you can recognize it as an asset. Do you understand?
Yes, sir.
So until that thing is confirmed, that's when you can recognize it as, and it's not a non-current asset. It's not a non-current asset or other asset. This is a contingent asset, because this will become an asset when the thing matures, when insurance company confirms that they will pay you, they will reimburse you. Ordinarily, we don't record contingent asset. We only record contingent liability. Ordinarily. But you can record a contingent asset when the probability has been ascertained that yes, insurance company will reimburse you. There will be indemnity for it. Do you understand now? Because don't forget, we have transferred this 577,000. We've transferred the risk or the loss to the insurance company, right? Am I
Yes,
right?
sir.
So that is what we have there. Any question?
Hello, sir.
Yes, sir.
So what if whereby the insurance confirm it's not worthy?
If they confirm it not worthy, then you be the one to bear
Yes.
the loss. That's why you are making a provision for it. Provision of 577,500.
Okay. So we took as a provision in the first instance. So
Yes.
when it's been confirmed, we now
Until it
treated it
is
as a
confirmed.
contingent asset.
Yes. And don't forget, your provision can be increased or reduced until it is confirmed. And don't forget, eventually, when the warranty is to come, it might not be this exact amount anymore. Right? It might not be this 225,000 and 577,500 anymore. Now, if from the second leg, let's say only 500,000 was the warranty that was claimed, and then insurance company decides that they want to reimburse you. If insurance company wants to reimburse you, you will not recognize 577 as your reimbursable now. You only recognize the 500. Do you understand? But the provision that has been initially created was 577 500. Do you understand, please?
Yes. Okay.
So that is that.
Yes, sir.
Now, any other question on this particular topic? Any other question? No question, right? Now, let's quickly look at another topic before we round off within the next 20 minutes. Let's quickly look at another topic. And that other topic, where is the material? Please, let's look at another topic before we round off today's class. This is impairment, which we have done. Let's go into, yeah, asset held for sale. Okay, we did not discuss asset held for sale before we went into that topic in the last class.
Do we have anyone to read?
Do we have anyone to read?
Hello?
Yes, please.
Yes, please.
It is May 2015, question 7, right?
Yes, please. Go ahead.
Yes, please. Go ahead.
Okay. Ondo Telecoms Limited. Ondo Telecoms Limited is one of the biggest telecoms companies in Abuja. 1 month after the year end, the Chief Finance Officer, CFO, while reviewing the company's activity, came up with the following issues for the year ended 30 September 2014. A. The Board of Directors is not impressed with the performance of the home broadband operating segment, which posted a loss of 1.7 billion naira in 2014 financial year, following another loss of 0.8 billion in the 2013 financial year. B. The carrying amount of the assets in the segment is 4.3 billion as at 30 September 2014 and 4.5 billion as at 30 September 2013. Professional valuers were engaged and they came up with a fair value of 4.2 billion as at 30 September 2013. C. The Board of Directors made the final decision in June 2014 to sell off the assets in this segment and concentrate on other business lines. Since the beginning of September, 4 serious bidders have been negotiating with Ondo. The board anticipates the sale to be concluded by end of May 2015 with a transaction cost of 0.3 million naira. D. On 1st November 2013, Ondo Telecoms Limited acquired a block of flats with an estimated useful life of 50 years at a total cost of 225 million naira. The blocks of flats are to be rented out to its employees and engineers at market prices. The decision to acquire the block of flats were made by the board due to the need to have engineers close to the head office to attend to technical issues immediately they arise. E. Professional valuers were engaged to value the flats as at 30 September 2014 and a fair value of 232 million were determined. F. International Telecom Limited, which acquired Edo Communications Limited during the year, has just published its result. Edo Communications Limited was a direct competitor to Ondo Telecom Limited and does similar business. The CFO noted that International Telecom Limited shows an asset of 110 million arising from Edo Communication Limited customer lists. This made the CFO realize how valuable the customer details are and has engaged a professional valuer who valued them at 98 million naira. G. Over the years, Ondo Telecoms Limited's main business have been provision of mobile and fixed landline services, as well as broadband services. In July 2013, Ondo Telecoms Limited bid for the award of the subscription television license from government. F. Ondo Telecoms Limited won the bid and paid 560 million naira for a 5-year license beginning 1st October 2013. The license is transferred and at the time of winning the bid, the fair value of the license was estimated at 580 million naira. Due to the slow uptake of the television business, the license was revalued at 420 million as at 30 September 2014 by a professional valuer. Required. Advice with suitable computations how the above transactions should be accounted for in the financial statements of Ondo Telecoms Limited under IFRS for the year ended 30 September 2014. 15 marks.
Okay.
Okay.
Sorry, my voice is echoing. I don't know. Okay, we can continue. Now, we have the information given to us, right? from information A to information H. So let's take them one after the other. The board is not impressed with the performance, right? And because they are having an operating loss of 1.7 billion, following another loss, following the loss of 800 million in 2013, and in 2014 they had 1.7 billion loss. So now, since they are not satisfied, they looked at the carrying amount of their assets in the segment. All right, the segment, the assets carrying amount is 4.3 billion as at 2014 and 4.5 billion as at 2013. What has happened to the assets? What has happened to the assets?
It has appreciated.
Sorry?
Appreciated.
So that's depreciation, right? Okay. And the depreciation is how much? What's the depreciation there? What's the depreciation there?
300,000. 200,000.
Okay.
100,000. 100,000. 100,000. 100,000.
Look at some
This company,
this company. Now, what they are trying to do is to close that
right?
Okay.
Am I right? They want to discontinue the operation of that segment because they are making a loss. So they are trying to review the company's activity. All right. So now they can make a decision whether to eventually sell it off or review the activities there and then make another decision. Right. But right now, yes, the cost price, the asset has depreciated from 4.5 billion to 4.3 billion, which is 200 million naira. I mean, 200 million?
Yes.
Yes, 200 million. Now, that 200 million, professional valuers were engaged and they came up with the fair value of 4.2 billion. So what has happened? What do we call that? What's the difference between them?
Yes.
And what has happened? Yes, I just need you to tell me something. What has happened there? When
It
you
has
have
depreciated
when you
from
have a carrying amount and you're also given a fair value, what does that tell you?
There's impairment.
There is impairment. Thank you, sir. And the impairment is how much now? You don't know what's the figure for impairment? What's the formula for impairment?
Impairment is where the carry amount of assets is exceeded the recoverable value.
When the carrying amount is more than the recoverable value. What is the
Yes.
carrying amount? What's the carrying amount now?
4.3.
So the carrying amount.
the carrying amount.
The carrying amount at the beginning
The
of
carrying
the year
amount.
was in 2012.
Please, if you're not talking mute, it's echoing on my side.
Please, that person should mute, please. Shall we proceed now, please? Shall we proceed?
Yes, sir.
Okay. So the carrying amount as at 2013 was 4.5 billion, right? And also, as at that same 2013, the fair value is 4.2 billion, right? Now, this fair value should be like fair value less cost to sale. Because if there was any cost to sale, then we'll deduct it from this 4.2 billion. Am I right? Am I
Yes.
right?
Yes.
Okay. So fair value less cost to sale, that's 4.2 billion. Now, when the carrying amount is more than the recoverable amount, So what's the recoverable value? How do we get the recoverable value? Yes? How do we get recoverable value?
The fair value.
Fair value less cost to sale. And what?
And the value in use.
Value in use. Thank you, sir. The higher or the lower the lower?
Yeah.
The higher of them.
Yeah.
Okay. Now, fair value less cost to sale is the only one we have. We don't have value in use, right? So we have 4.2 billion from 4.5 billion. That means impairment is how much? 0.3 billion, right?
Yes, sir.
Okay. Now, so we are treating the transaction, the information one after the other. So the board also made the final decision in June 2014 to sell off the assets in the segment and concentrate on other lines. So what do we do to that? Now, those assets in the segment, they made that decision in 2014. Those assets in the segment now, what do we treat them as?
Discontinued operation.
How do we treat those? What is the classification of those assets? Do you call
Asset
them
will be
a PPE? Is it a
Held
what's
for
the correct?
sale.
the
Sorry?
asset will be the asset will be recognized in the non-current asset and classify we credit the non-current asset by the recognized asset and debit it under the current asset as asset has to be
I
one line
did
item.
not get that. We debit,
That
we
it will
credit
be
the
reclassified as held for
If we
sale.
recognize it under the non-current asset by credit the non-current asset, credit the non-current asset and recognize that asset held for sale that is one line item in current
okay.
assets.
Okay, so I've gotten the point. So it is an asset from June 2014, it becomes an asset held for sale, right?
Yes.
And what are the conditions before an asset can go into that category? What are the
Yeah.
non-current assets that are held for sale?
The management will make a plan to sell.
Sorry?
Management is a plan to
Oh my
sell.
God, I'm struggling to hear you, sir. I'm struggling to hear you. I don't know. Am I the only
So
one
the
struggling to?
management will make plans to sell off those
Yes, the
assets
management has
within.
made a decision to sell it off.
Yes,
And
and then there'll be a search for a buyer
uh-huh.
within that specific time, within a year.
Uh-huh. The
Then
sale is to be
also,
completed within
The
a year.
person that
Not just fine. The buyer must buy, they must sell it within a year. Okay, and what else?
there must be the price selling price of asset coming to the market.
I don't know why I'm struggling to hear you. So another thing is that there is high probability of that sale. It's not like something that we cannot sell. It is not an item that cannot be sold. So there is high probability of sale, right? Management must have decided, and the sale must be completed within 1 year. Okay, fine. So we've treated that. So that one is a non-current asset held for sale. Now, let's go back to the requirement and check the requirement. Advise with suitable computations how the above transactions should be accounted for in the financial statement of Owando as at 2014, right? Now, this first transaction, information B, right, up to C, the asset becomes a non-current asset held for sale, right? Then we state the conditions that made it an asset held for sale. Am I right, please?
Yes.
yes, sir.
Okay, so that's fine. Now, the next thing we have, what's next? So the board anticipated the sale must be concluded by end of May 2015. Decision was made in June, Abi? Where is it? Where is it? Yeah, June 2014. So that means, and it must be completed by 2015. If it is concluded by 2015, definitely it falls into the category with transaction cost of 0.3 million. This is the cost to sale. This is the cost to sale. Fair value less cost to sale. The fair value was how much? 4.2 billion. The cost
2
to
million.
sale is 0.3 million.
300.
This is the cost to sale, right? Am I right?
Yes.
Yes, sir.
Okay, shall we proceed, please?
Yes.
Yes, sir.
Now we've identified how to treat this transaction. Assets held for sale, non-current assets held for sale, and we give the conditions. The conditions are even in the question, right? That's it. Now let's go to the next one. On the 1st of November 2013, Ondo Telecoms Limited acquired a block of flats, right?
Yes, sir.
Am I right, please?
Yes, sir.
Wait, before we go, let's finish this. This 4.2 billion minus 0.3 million, we call it the fair value, right? So
Yes, sir.
so which one are we addressing now? So is the asset impaired? Yes. 4.3 billion to 4.2 minus 0.3 million will give us 4.1
3.9.
billion, right?
3.9.
4.19.
3.9.
No, no, it cannot be 3.9. This is not 3 billion. This is not 0.3 billion. No. It is 0.3 million. This is 4 billion 200 million. It is from this 200 million that you remove 3 million. Can you see my screen, sir? Please, that person should mute. Can you see my screen?
Yes,
They
sir.
did
I can
not.
see your screen.
So 4 billion is 4.2. 4 billion 200 million minus 3 million. So that is 4 billion to 197 million. Is it 197? Because this is 200 million. 200 million minus 3 million. That would be 197 million. 4 billion
Yes.
197 million. Am I right?
Yes.
Okay, so now that is our what would that be? That's our fair value, right? Am I right? So
Yes,
the
sir.
difference between our fair value and our carrying amount will be the impairment. Am I right?
Yes, sir.
And that will be taken to our income statement. That's the recognition, right?
Yes, sir.
Okay, good. We can proceed now. Am I right? Please, I hope you are taking note of that. I may not write anything in this class. Do you understand? Because basically what I'm to do here is typing. So I believe someone is taking note and jotting there. If you jot it, even if it is one person, please snap and send it to the group so that we can always have access to it. But please, I'll need to vet it. Don't worry, when you send it to the group, I'll check it before so I can assign others to go through it. If there is any point missing, I can also include it. Okay, that's that. Now, on the 1st of November 2013, Ondo Telecoms Limited acquired a block of flats with an estimated useful life of 50 years, right? And the total cost is 225 million. The block of flats are to be rented out to its employees and engineers at market prices. The decision to acquire the block of flats was made by the board due to the need to have the engineers close to the head office to attend to technical issues immediately they arise. How do we treat this transaction?
Should be treat in
The present.
accordance with IS, we are
No, sir.
in accordance.
Sir, please hold on. Let someone else talk, please. Please, let's give someone else an opportunity to contribute to the class. Don't worry, we'll still take your points as well, right? But let someone else go first. Yes, anyone? And who is speaking? I think I need to be looking at the faces now as well, so that I can take note of whoever is contributing to this class. Yes. Who is that person? Who is going first? How do we treat the transaction? Yes. Yes. How do we treat it? No one else? Hello? How do we treat it, please? Okay, sir, please go ahead.
It should be treated in accordance with IS 16, property, plant, and equipment.
And why are you choosing IS 16 and not IS 40? Investment property.
Because the property is rent for the it's rent for the staff,
Okay,
which
so
is not.
it is being rented to the staff, Abby?
Yes, I think for the engineer of the company to make them attend to any technical issue that may arise. I think.
Does anyone else agree to that?
It should be treated as investment property
Yes, investment property. How? Why? Tell me, sir. At least I have someone else to speak.
because looking at looking at the assets now, the property is not a property that is a property where rental income will be coming in from.
Okay. Someone shared one information on,
Oh,
I don't know if it
but
was
is it
your
that I
group.
can't see the probably I can't see the question properly?
I don't know if it was your group. Someone shared one information about IS 16 some days back. Let me see if I can get it from it. Please go ahead. If it was not in your class, probably in the FR class, to the FR group, I'll check it and send to you if it was not in your group. But someone sent it, and I think it was kind of recent. Go ahead, please. IS 40. So I didn't get your point earlier on why it is IS 40.
Oh, sorry. Can I see the screen for the
Yes, please. You
question
can
again?
see the screen. Go ahead, sir. I just want to see the name too.
Can I
The
Hold on,
screen is
let him
not
finish.
showing the question. Okay.
Yes, I'm listening.
So I said that it is IS 40, not
Yes, why IS 40?
IS. It is not um it is not an asset. Okay. I don't know. I
Okay.
think I missed it wrong. I don't know.
Okay, one lady wanted to join the conversation earlier. Please
Okay.
go ahead.
Yes, sir. I said it's supposed to be recognized under IAS 16,
Mm-hmm.
property, plant, equipment,
Okay.
because it is occupied by the employees of the company.
Okay. Do we have anyone else? But don't forget the employees are paying rent, oh, and they are paying the rent at market price.
But the letter said that the property is value with the professional value the property more than what they said they told. That was why I say I say 16.
So, do we all go for
So,
IS
do we
16?
all go for IS 16?
That person should need to
IS
That person
16.
should need to please speak.
IS 16.
For my side,
Okay, why?
IS 16
Okay,
is
why is
IS
that?
16, why?
That person saying IS 16, why?
Okay, just to add, IS 16 is though is staff that are living there, it also forms more of part of their core activities. They are
40.
holding it for themselves.
Okay. So, yes, you're right.
So yes, you're right.
Because
It's
the
IS
intention
16.
is the intention of building the house or renting the flat is to help the company running their activities, so that if there is any breakdown in machines, they can easily go back and fix it. So it's the intention that is
The
making it
intention matters.
IS 16
The
from my own
intention
part.
matters.
Yes.
Yes.
So, I'll take the point from the first man who said who talked about IS 16. Even though the apartment is rented out to their staff, right? The essence of renting it out is to bring the staff close to the business in case of any technical issue or emergency, yeah, someone sent the group. Dominic, I was sent it to your group on Tuesday, and I'm highlighting the message now, IS 16. So you can check it on the group now. The message is there. All right. So IS 16 in the sense that the asset is meant for the staff, the employees of the organization. The asset was not constructed for capital appreciation. I don't know if you understand what I'm saying. Remember, there are two things. There are two reasons you can. IS 40 must be into three reasons. Number one, for capital appreciation, right? Number two, for the sole intention of collecting rent. Number three, for the combination of the two reasons. All right. So which means either we see one of the two reasons or we see the two reasons. Yes, that is investment property. Now the blocks are to be rented out to his employees and engineers at market prices. But the decision was made due to the need to have the employees, to have the staff, engineers, close to the head office in case of any technical issue. So how do we treat this transaction? Yes, IS 16, how do you recognize the asset? What's the initial recognition?
Cost.
At cost, sir. Initial recognition.
Okay, that's the measure.
That's the measurement, right?
That's the measurement, right? Initial recognition is what we have mentioned.
Is it IS 16 or
IS 40? Yes, initial recognition. Recognition is recognition is that person should put.
As the person muted. Okay. Now the recognition is IS 16. Okay. Now, initial measurement. How are you measuring it? You're measuring it at how much? The total cost of 225 million, right?
Yes.
That's the cost.
Yes.
That's the cost of.
Okay. Now, what will be the depreciation? Straight line method, Abby?
Yes.
So that is 225 million divided by 50 years. Am I right?
Yes.
Now,
Yes.
when did we constructed the building on the 13th, on the 1st of November 2013, and our accounting year end is when? September 2014, right? 30th September. Am I right,
Yes.
please?
Yes.
Am I right?
Yes.
Okay. So if that is the amount. Now, November to 30th September is how many months? 11 months. Am I right, please?
Yes, 11.
Okay.
Okay. Hold on.
So let's say the value of the asset is 225 million, right? Divided by 50 years. What's the depreciation by year? Cost. What's the depreciation? The cost is at 225 million, right? So what's the depreciation per year?
4.5.
4.5. But this time around, in 2013, between 2013 to 2014, our depreciation will be 4.5 million, round figure, right? Right?
Yes, sir.
Yes.
Times 11 months divided by 12. We have to prorate it.
Divided by 12. We have to prorate it. Am I right?
Yes.
Okay.
Okay.
So what would that give us?
Okay. So what would that give us? That person should explain. That person.
4.125.
Sorry?
What would that give us?
4.125.
Okay, 4.125.
Okay, 4.125.
Now, when you deduct 4.125 million from your 225 million, what's the carrying amount? What's the carrying amount now?
220.875.
220.875. You know how we got that, right?
Yes, sir.
Okay, so this is my cost, which is 225 million. Depreciation for the year. $4.125 and a minus, right? And if I do this one, I to change it to 4.13. So that gives me how much, please? What do you call it? 221 million, right? Now 221 million is the 221 point figure, it has figure. I mean, it has figures now. 225 million minus 4125, 221 point something something something. Is it 221? No, 220.
220.875.
220.875 million.
875.
Shall we proceed, please?
Yes, sir.
Okay. Now, if this is my carrying amount, we have another information in the question. Right? What does it say? The next information says that professional valuers were engaged, to value the flat as at 30th September 2014, and a fair value of 232 million was determined. What is this amount? This is called what? The revaluation amount,
Yes, sir.
Yes, sir.
So revaluation amount is 232 million. Revaluation 232. So what's the difference? Our revalued amount is more than the carrying amount, so there is no impairment here. We agree, huh?
Yes, sir, because there's nothing like impairment gain.
There's nothing like impairment gain here. Okay, yes, I understand what you're saying. Impairment itself is a loss, so there's nothing like impairment at all. But what we have is a revaluation gain.
Can we say it's revaluation surplus or gain?
Yeah, revaluation surplus, anyone you call it. Gains on revaluation, revaluation gain, revaluation surplus. Whatever English, please go ahead and use it. Now, what's our revaluation gain in this case?
11.125.
So 11.125 million is our revaluation gain or revaluation surplus. All right, so that's it. Please, are we together?
Yes, sir.
So this is the revalued amount, If we are using the revalued amount, if we are using cost method, then our carrying amount will be 220. If we are using revaluation method, we will be using 232. So this 232 is what we have in our financial position. Am I right?
Yes, sir.
While the revaluation gain will be in our income and other comprehensive income statements, right? Am I right?
Yes.
Shall we proceed to the next one? Shall we proceed?
Yes.
Okay.
Yes, sir.
We can go to information F. That person should also mute. That person is having a bad network or a bad reception, actually. Okay. Now, International Telecom Limited, which acquired Edo Communications Limited during the year, has just published its results. Edo Communications Limited was a direct competitor to Ondo Telecom, right? So International Telecom has purchased Edo Telecom. Now that makes International Telecom a direct competitor to Ondo Telecom, right? Am I right?
Yeah.
Now, it
Yes.
is also noted that Ondo Telecom shows an asset of 110 million arising from Edo Telecom Limited customer list. 110 million naira arising from customer list. Please, what is that?
Yes, 38 intangibles.
So,
Asset.
does this 110 million qualify as an intangible asset? Does it qualify for an asset? Eh? Is it an intangible asset? I'm asking you, is it an intangible asset?
Sorry, come again with the question.
This 110 million arising from Edo Telecommunication, from Edo Communication Limited Customer List. CFO. Which CFO is this now? The CFO of Edo Telecommunication, I mean the CFO of International Telecommunication now, has identified this as a customer service list. Right? This made the CFO realize how valuable the customer details are and has engaged a professional valuer to value them at 98 million. This 110 million, is it an intangible asset?
Yes.
I think it's intangible asset
For international communication is intangible asset for them.
Why is it an
But for
intangible
Why
Edo,
is it an intangible asset?
they acquired them Edo Communication, this international communication.
Mm-hmm.
Is that all?
So
Is that all?
I think is the data value arise as a result of acquisition. So when the one company acquire another company, I think there is in accordance with the IFRS 3, I think we need to follow the value of the subsidiary acquired by the parent.
So please, Mr. Suleiman, is it goodwill you're trying to say?
This is not a goodwill. This customer service is also another customer service is also another intangible asset. Is another form of intangible asset. Don't forget, goodwill is an intangible asset. We also have so many other intangible assets. Do you understand? We have so many other intangible assets apart from goodwill. Goodwill is not the only intangible asset. We agree to that, right?
Yeah.
So goodwill is not the only one. Now, International Telecommunication Limited can realize this, can identify this or recognize this as an intangible asset because it's not an internally generated asset, right? It was purchased. Is that it?
Sir, please take that again.
Now, the intangible assets that we have we done IS 38? Have we done IS 38 in this class?
Yes, I think we did.
No, sir, we have not done it.
We didn't do it in our last class. Huh? Hello?
Yeah, we didn't do it. I don't think we did it.
Okay. So there are some intangible assets. I think we mentioned some items under the intangible assets, but we didn't treat it like a topic on its own because we have another topic that will tell you, that will give you the details of some transactions that that are under intangible asset. For instance, a newspaper head. A newspaper head is an intangible asset, and there are some of these assets that you can recognize, but we will only mention that internally generated intangible assets cannot be recognized. Hello?
Okay, sir, we are with you.
Hello?
Yes, sir, we are with you.
Okay. So, but this one, now this CFO made Hello, can we? Yes, I can hear you. Does anyone want to say something?
Oh, sir, we are listening to you, sir.
Okay.
Ben! Ben!
Please, that person should mute.
Which people are outside making noise like that?
Please mute.
Which people there outside they make noise like that? Purity there.
Hello.
I'm Frederick. Your Michael.
Pere, please mute.
Okay. Now, this customer service rig, right, was purchased by Internal Telecommunication. They purchased the whole company, and of course, customer list is there. Okay, since it was acquired via what's it called, through acquisition, since it was recognized after acquisition, then you can recognize it. But if it is internally generated one, you can't recognize an internally generated one. But of course, there are some conditions, though, right? Are we there, please?
Hello, sir. We can't see your screen again.
Hey, my screen is here. Can someone confirm that?
Yes, you can. I think you deactivated it.
No, I did not.
It showed here you stopped sharing.
Oh.
Yeah, that's what it showed.
Can't see your screen.
Okay, no, something happened. I think Mr.
Okay.
Ibrahim has to come in again. He's saying that I can't share my screen again. You are not allowed to share your screen. So that's why it's deactivated.
Okay, I'm coming, sir. I'm coming, sir.
Okay. Even my video got deactivated too. So hold on, guys.